This video series took 720 hours and 1 month to produce, truly enlightening. In this video, I will guide you through a breakdown of Asterisk, the essays of Warren Buffett Asterisk, delving into the investment mindset and philosophy of the legendary investor. This is more than just an investment book. It's a treasure trove of knowledge about success, finance, and mindset. If you aspire to shift from pursuing wealth to controlling wealth, this book will be key to achieving your goals. Hello everyone, welcome to today's video. In the previous chapter, we explored Buffett's investment philosophy and his long-term vision concept. Today, we will delve into Buffett's value investing principles, how he assesses the intrinsic value of businesses and applies these principles to his investment decisions. Chapter 5, Berkshire Hathaway's Initial Strategy. In this chapter, we will explore Berkshire Hathaway's initial strategy and investment tactics, examining how it transformed from an ordinary textile mill into a leading global investment holding company. Buffett's business acumen, strategic vision, and unique investment philosophy played a crucial role in this journey. 1. Berkshire Hathaway's beginnings. An ordinary textile mill. Berkshire Hathaway's history dates back to 19th century America. Initially as a textile mill in Massachusetts, run by the original partners, the company primarily produced textiles, supplying various fabrics. Despite its long history, its business model struggled to find a breakthrough and faced numerous challenges. In 1955, Warren Buffett first encountered Berkshire Hathaway. At the time, Buffett was a young investor, fresh out of college and beginning to make his mark in the investment world. Berkshire Hathaway's stock was low, and the company faced operational difficulties. Buffett recognized this as a potential investment opportunity. To an initial acquisition, from textile mill to holding company, Buffett, through his company Buffett Partnership, initially began acquiring Berkshire Hathaway stock. He didn't initially intend to immediately control the company, but rather recognized its potential asset value. At the time, the company's management team lacked strategic vision, and its business direction was unclear, which gave Buffett the opportunity to intervene. Warren Buffett gradually increased his stake in Berkshire Hathaway, eventually gaining control. By 1965, Buffett had complete control of the company and began a major restructuring. His first decision was to shift the company's business from traditional textile production to investment holding, thereby gradually achieving a diversified strategic layout. The success of this restructuring lay in the fact that Buffett did not blindly maintain the traditional textile mill model, but rather promoted the diversification of the company's business through bold strategic adjustments. He recognized that in the economic environment at the time, the prospects for the textile industry were not optimistic, and only by acquiring other companies with high profit potential could Berkshire Hathaway's future growth be ensured. 3. The core of his investment philosophy, value investing and capital allocation. After gaining control of Berkshire Hathaway, Buffett quickly shifted its operating philosophy to value investing, focusing on the discovery of intrinsic value and long-term capital allocation. His investment philosophy differed significantly from the prevailing market trends, emphasizing the selection of undervalued companies through in-depth analysis of their financial conditions and long-term profitability, rather than chasing short-term market fluctuations. Warren Buffett understands that a company's success depends not only on external market changes, but more importantly on its long-term competitive advantages and sound management. Therefore, he focuses on acquiring companies with stable revenue streams and strong brand recognition, aiming to create value through long-term holding. For a Berkshire Hathaway's first major acquisition, Geico. After taking over Berkshire Hathaway, Buffett's first major acquisition was the American Auto Insurance Company. Geico Government Employees Insurance Company, GEICO's business model was very simple, focusing on providing relatively low-cost and efficient auto insurance. Buffett saw the company's enormous market potential and decided to acquire it, adding it to Berkshire Hathaway's portfolio. Unlike traditional insurance companies, Geico used a direct-to-consumer marketing approach, reducing insurance sales costs through methods such as telephone sales, thus creating a differentiated advantage from traditional competitors. Buffett, with his keen business acumen, recognized this and believed Geico had significant growth potential in the coming years. Through this acquisition, Berkshire Hathaway not only successfully entered the insurance industry, but also further validated Buffett's investment philosophy, focusing on companies with long-term competitive advantages, especially those that can provide stable cash flow. 5. Berkshire Hathaway's diversification expansion, corporate acquisitions, and portfolio construction. After acquiring Geico, Buffett began to further expand Berkshire Hathaway's investment portfolio. He continuously brought different types of companies into Berkshire through mergers and acquisitions and equity investments. To ensure the rational allocation of capital, Buffett did not overly diversify his investments, but concentrated on a few companies with significant growth potential. Berkshire Hathaway's portfolio gradually covered multiple industries, including insurance, consumer goods, energy, and manufacturing. Through these acquisitions, Berkshire Hathaway not only gradually built a vast investment empire, but also further solidified its leading position in the capital markets. Under Buffett's leadership, Berkshire Hathaway's management team has consistently maintained a high degree of transparency and a long-term development strategy. Warren Buffett emphasizes that investing is not merely about managing money, but more importantly, about accurately grasping the future value of a company and allocating capital for the long term. Therefore, Berkshire Hathaway consistently adheres to a value-centric investment philosophy, focusing on long-term returns rather than pursuing short-term profits. 6. Investment philosophy and management team selection. Buffett's success stems not only from his investment acumen, but also from his meticulous selection of management teams. He firmly believes that the competence and ethical standards of a management team are crucial to a successful company. Buffett places great emphasis on selecting managers who possess both professional skills and alignment with shareholder interests. In all of Berkshire Hathaway's investment projects, he consistently insists on maintaining the independence and decision-making power of the company's managers to incentivize them to be responsible for the company's long-term development. Buffett once said, "The competence and integrity of the management team are key to a company's success." This management philosophy is fully reflected in Berkshire Hathaway's acquisitions. Under Buffett's management, Berkshire Hathaway has consistently maintained strong execution and competitiveness, becoming one of the world's most valuable companies. 7. Conclusion: the success of Berkshire Hathaway. Berkshire Hathaway's success is not accidental, but stems from Warren Buffett's profound understanding of investment and company operations, as well as his consistent adherence to value investing principles. From an ordinary textile factory to today's global investment holding company, Berkshire Hathaway's transformation fully demonstrates Buffett's strategic vision and extraordinary leadership. Through mergers and acquisitions, investments, and capital allocation, Buffett has successfully built a diversified investment empire, becoming one of the world's most influential investment masters. In the following chapters, we will continue to delve into Buffett's investment philosophy and his secrets to success, helping you understand and apply these principles to achieve wealth appreciation and accumulation.